Hey yo JJ, so today gonna go through some things in terms of what do you call it, the pricing. So I'll go through a bit more about the candlesticks today, patterns. So patterns, how to see basically all these charts, right? What kind of patterns are reliable and how to use them to your advantage. So 1 second. Okay, so we talk about candlesticks patterns today. So there are a few patterns that I will run through. Um, those that I think are very helpful. So there are bull and bear flags. I'll run through each and every one of them. Talk about breakouts. All these are all candlesticks patterns. False breakouts. What else? Island reversals. One of very strong as well. And then buying the dips and rallies. So these are different namings, way to describe a candlestick pattern lah. So these are ways to um, identify pricing, more specifically when to enter, or even yeah, most of the time more of an entry lah, entry to enter the market. So okay, let's jump right to it. Bull and bear flags, right? So bull and bear flags are basically pricing patterns of the candlestick. So how it actually looks like, right, is somewhat similar to this kind of pricing. So where it went up and then there will be actually a couple of days that paused a while, showing like a flag kind of a thing. So where the market actually moved quite a lot. So in this case, the market moved a lot upwards and then created some kind of a flag over here. So it's normally a few days to a week. So these are very strong patterns. So you see, this is the bear flag. So bear flag is a bear flag. Okay, to give you some context, right? Bear bull is up market. That means prices moving up. Bear is down market. Okay, so this is when you say it's a bull market right now. That means prices are going up. Stock prices are going up. If it's a bear market, that means prices are coming down. So this is bull market, bear market. So when you say bull and bear flags, so bull flags and bear flags. So you see this one is a bear flag. Also bear because pricing come down, and then it created a flag. So it's like a flag basically. So once it created a flag over maybe a few days to maybe a week, 3 to 5 days lah. Then after that it continues going down. So this one is 1, 2, 3, 4, 5, 6, 7. So it's about 7 days. Generally it's around 3 to 5 days. So this is another bear flag. Bull flag there, bull flag over here. So prices went up and then paused a few days and then went back up. So this one normally is the action for this, right, is to follow the price, the trend pricing. So it went up and then it has a flag, and then the idea is to buy. Okay, so this is bull and bear flag. Okay, quite straightforward lah. Then there are other methods like went into the triangle, another way of looking at it, but we'll just talk about bull and bear flag today. So an example of a bull and bear flag, right? This is the forex. We're looking at day chart here. So this is a bear flag. So prices went up and then paused a couple of 2 days and then went back up again. So then this one also went up 1, 2, 3, 4, 5. Then after that went up. So this is like a bear flag. This whole area lah, you can see, right? Another example is a little bit hard to see over here, but let me just adjust a little bit. So this one price went down and then there's a bear flag. So 1, 2, 3 up and then went down. And this is a bull flag. So it went all the way up and then paused for 1, 2, 3 days, 2 days, and then went up again. So these flags are fairly reliable. I like to use them a lot. Yeah, so it works especially it works when the trend is up. Remember the SMA, the moving average, is a 50 days average of the pricing. This shows whether the trend is up and down. So it works especially well. So this one is like a downtrend, right? So you see downtrend, right? If you want to look to always follow the trend. That's the idea. Always follow the trend. So this is downwards. So down, down, down. Then after it has a flag. So 1, 2, 3, 4, 5, 6, 7, and then went back down. And then 1, 2, 3, 4, then went back down. So this is the bear flag. Bear flag. Okay. Then I give you another few examples. Maybe an up market. I show you some bear bull flag. So bull flag, normally this is the uptrend, right? So this one, there isn't really much of a bear flag, it's a bit too messy around here. So this one will be not really a bull flag, but then over here, this is a better one. So we press uptrend, so we want to follow the trend. Price went down 1 2 3 4 5 6 and then start to move up again, right? Then yeah, not all the time, but these are little things that you equip yourself to have over the long, I mean, like it's like a toolbox. You put many toolbox inside and then in your toolkit to create. Okay, so this is the bull and bear flag. Okay, breakouts. What breakouts does is basically it has been, okay, so let me show you this one. So breakouts, right, is that price has been trying to hit certain pricing. Let's say maybe, I don't know what price is this, too small to see. Let's say this is $1, and then being keep trying to test. $1 cannot hit, and then cannot hit, and then over here also cannot hit, and then went back up, and then after that suddenly boom, and then it break through. Once it breaks through, right, this is called a breakout. So breakouts are generally tend to be very strong. Maybe I show you an example. So let's see there. Okay, here. So price, right, is drawing tools. Let me see. Okay, I'm just gonna draw roughly lah. I'll teach you about this, how to draw these lines. So price has been touching, all right, and then after that touched here again, and then touched here again, and then touched here again. But once it closed below this trend line, right, and it went back down a lot. So this is an example of a breaking of the resistance. Okay, so it went down a lot. So another example is I'll just try to find one that's yeah, I think, let me see. Okay, so let's see another one. So trend line is somewhere around here, all right, somewhere takai. Okay, so the trend line is been touching here, went down, and then after that bounced, and then tried to hit down, couldn't go down further, and then with the support line, so it's a bit the trend is not that strong, and then touched here again, and then it started to touch and went back down, but went back up. So but you see over here, once it started to cross it, the pricing will actually start to come down. So not the best example, but these are all breakouts. So this is another good example of a breakout. So there's trend line here, somewhere around this range. Okay, so where over here it tried to hit and then couldn't, it come back down, hit the top, the price couldn't break through and back down. Once it went back up, this breakout, and then you see support with this moving average line also, right? And then you see a very strong up movement. So this is a very strong example. So this is breakouts, where it tried to hit a price that, but many times, and couldn't break through, right? So if this is the latest pricing, so we could also draw a trend line here, somewhere around here. Let me just draw again. Okay, so it's something like this, right? So price hit, couldn't go back, and then hit up again, couldn't pass it through this line, hit up, couldn't come back down, hit up, and then went back down, and hit up. Now it starts to come back down again. So with this trend line, if it continues this way, right, it will actually show if price, okay, basically if this continues going up, and then it will meet this line, or meet this line, it will be a very strong line, and we could actually, if price continue this over the next couple of maybe 2-3 weeks or so, it can actually look to even buy. So this is we could expect some kind of breakout also lah. Okay, so that's breakout. And so okay, then false breakouts is basically pricing that actually try to break through already, but didn't follow through, and then came back down. So it's a false lah, very opposite lah. I give you an example. Maybe I show you the picture first. So there, this is very good false breakout. So what happens is the price, where is the false breakout? Real breakout, no, I want a false breakout. No, this one not good example. Not good example. Okay, it's a bit small over here, but the idea is that price actually went up, and then after that, no lah, this one not good example. Let me see. Okay, never mind. I use real charts to show you easier. So let's see, false breakout. Okay, that's a good one. This one over here. Okay, so price actually went up, right? Then after that, tested, come back down, tested, then it kind of break out, right? So the breakout, then we would think that it will start to go up and run away the price and start going up. But then the definition of a false breakout, right, is, to be specific, is short-lived, doesn't stay for long. I think within 1-2 days you can know that it's not sustainable. So it went breakout, it went up, right? So you see this went up 1 and 2 days were quite strong. So we thought that is can make money already, can buy and make money. But then the next day it went down, and then another down, and then another down. So it's normally it's these are things that signal that this is like prices are exhausted already. Then you start to come back down. So it went down and then went down quite a lot, and then it retraced. But ever since then, it didn't go back up already. It just went all the way down. So it is actually very strong when you have strong resistance line. So as that the straight line lah. Okay. So let's see another good example. I need to find a good trending market. Okay, this, let me see. Breakouts. I need to find resistance line first. Might be hard to find. Okay, but the idea is don't have let me see. I want to find one for you. Breakouts. So the idea is a clear sign that it didn't continue lah. Okay, it's basically exhaustion. Let me see. Here, good one. Okay, so you see this line over here. So the price test up, went back down, test up, went then ding dong here, keep testing, and then after this one tested and shoots through, and then the next day also went higher, but it came back immediately down. So this is a false breakout. So that means it break out from this resistance line, right? This line, right? And then by right it should go up based on the breakout but then it didn't. So it closed back down. So this is very good. This is a very good example that actually didn't. It's a false breakout. So it shoot up, but the next day or two, the second day, it starts to come back down. So this is a false breakout, a clear example of false breakout, and then price exhausted already, and then just tumbled down already. Tumbled down quite a lot. Yeah, based on the chart, actually tumbled down quite a lot. Boom, all the way down. So that's false breakout. Okay, very reliable. When that happens, yeah, very reliable. So let me see if I can find one more for you. False breakout. We need to find resistance lines first. Yeah, why don't have okay, I use pound bar. Maybe pound got more action. there, here. Drawing tools. That's our line. Okay, you see there's a somewhat like a line here, right? There's a resistance line here, and then there's a line here, right? So within this range, so what happens is the price went up, came back down, price went up, tested here, came back down, price went up, and then pushes through, and then we would think that this is somewhere with this trend lines up, right? But it didn't, because the next few days the pricing is not strong. You see this the pricing, right? Instead of, if it's a strong day, right, you'll be like one open close higher. This one is open close, like open and close not a lot lah. And this, then after the third day open close was not a lot, and then so this is within the second or third day it starts to come down. So this is another false breakout. All right, so this is also a very good example. So that's false breakout. Okay, great. So we cover false breakout already. And then island reversal. Island reversal is basically, think of it as island. I see price went back down, came down, and then has like a is very detached from the chart one, like one island like that one. So normally it's a plus. That means plus, it means it opened and then maybe went up, went down at lowest, and then closed at the same price. So this is the classic example of an island reversal. It's detached from the chart because there's a gap, and then it returns back up, it shoots back up. This one also a small island where there's a small gap in between. It went all the way up, and then have a small price action here, but it's detached. So then after that it just came back down. Okay, so this one also price, and then there's a gap, and then consolidate a few days, after that shoot back up. So island reversal is also quite a strong one, and this is a perfect one. Okay, so I give you an example. This one is almost an island reversal. That means it's like right there on its own one, right? And then it went back down. So let me see if I can find any island reversals for you on the real chart. There. Okay, this one is an island. Not really an island. FX seldom have islands, not so much. But the idea of the island, right, is very small and like small pricing one. So island. I want to find a nice island for you. Okay, maybe I don't do one day chart. I do so that I can have more. Island. There isn't many island reversals in the market for forex, especially. But if you do see them, those are pretty rare. So is this not really? Okay, I can't find them. But you get the idea lah. It looks somewhat like this, okay. So it will stand out from the chart one. It's like very obvious one. It's like an island on its own one. Okay, so that's island reversals. Maybe we don't use that so much for now, but we do see it, then just take note of that. Okay, very powerful also. The last one I use a lot, which is called the dips and rallies. Dips and rallies, this is the last one. Dips and rallies normally is pricing where it paused for a few days. So I give you an example because I use it all the time. Let me delete away. Okay, so in a trending market, right? Let me show you a trending market. Okay, so this is the uptrend, right? Uptrend, price went up, and then this couple of days, this is like a flag. This is a flag, right? This flag. So flag dips, dips and rally. So dips and rally is just one is deep, right? One is rally up. That means one is for up market, one is for down market, basically. Okay. I try to find a good dip for you. There, this one very nice. Okay, so price went up, pause for 2 days. All right, this is a dip for 2 days, and then it shoots back up again. Okay, so and then here's another one. Price went down, then rally a bit for 2 days, and then continue down. Okay, so you need to find the patterns. Let me see if I can draw. Price went down. Cannot. okay, never mind. I wanted to draw for you. Yeah, so this one was another one. Price went up, dipped for maybe 1 2 days, 1 day, and then went back up. So dips and rally normally is about 2 to 3 days. See, this is another one. Price went down, rallied for 1 2 3, green is up, right? Then it went back down again, right? So these are also good ones. So you see, price went up. This is dipped for a couple of days, 1 2, maybe about 5 days, 1 2 3 4 5, and then came back down. So these are good entry signals, because what happens over here is the price went up. Let me see. Okay, let me just give you a better example just now. So there's no science to it, it's more of an art. So okay, we could use this as this is more of a flag lah, but assuming it's 2 to 3 days, what happens is you actually buy, okay, at the low of the past few days, because price went up so high already ma, right? Then you want to go in, enter, you cannot be buying high ma, you want to try to buy at a better pricing, so you buy at pricing where is the low of the past 2 3 days. So this price, let's say you buy over here at the low, low is at the 1.248045 lah, right? It's definitely higher, it's definitely lower than the past few pricing ma, because it's closed higher ma, all the pricing all higher ma. So if you buy here, it's a better price, and that's good enough, because you buy here, you capture the pricing ma, right? Compared to you buying over here, right, you lose out on this difference in the profits. So that's the idea about buying the dips and then selling the rallies. So yeah, all these terms a bit chim for you, but I'll try to simplify. Let me find another one. Okay, so this is uptrend, right? We want to look to buy, right? So price actually went up, and then we want to buy, but price too high, so we wait for the dip. So you dip 1, dip 2, dip 3, dip 4. So dip over 4 days. You buy here, and then it goes back up. So you buy the dips. And buy the rally. What I mean by buy the rally is, so you see, price actually came back down. This downtrend now, so we look to sell, right? Came back down, then too far already ma. So then this one went up 1 2 3. Then we sell. That means we aim to make money by the price going down. So you sell at the rally, because 1 2 3 rally, and then we sell. And then if you hold it on, you can make a good profit. So that's dips and rally lah. Yeah, I think I just wanted to share these two with you. Not this few. All right, and you can actually use them. I use them quite a lot, especially this one, dips and rallies. I seldom see this. Following the trend, we always follow the trend, which is this line, and then breakouts. So there'll be more tools that I'll be sharing with you. Flags also, I use them a lot. False breakouts, most of the time, I don't really use that much, but I could use them along the way. Island reversals, I seldom see them. Yeah. So yeah, this is the few for candlesticks. All right. Bye bye.